Hi, Happy New Year. It's Larry Gaines from Power Cycle Trading. This is our aftermarket power outlook for the first of the year. I'll just go over to today, January 1st, 2013, the markets, where they are coming from the close, on Monday. A lot of the move was reaction to potentially something getting done to resolve the fiscal cliff, a lot of short covering and a powerful move to the upside. So before I get started, though, if you've not received my free ebook, please just go to my website, powercycletrading.com, and you'll see under free ebooks this day trading e-minis. It's a free ebook. Just put your name and email address in there, and you'll get it right away. Now, one more thing before I get started. I'm still having a holiday special, and if you'd like to take advantage of it, you can get two of the power courses, your choice of either the power model that we use for our day trading, for the day trading futures, or for swing trading. You can get your choice of two of these. The normal price is over $1,500. You can get that plus option trading made simple, daily after power market outlook, 1 month free, and you get 2 months actually to the virtual trading room. I extended this to 2 months since I'm going to be taking a little short vacation here. So this total retail price is way over over $2,000, but you can get it right now for another couple of days for just $597. So if you'd like to take advantage of that, go to this special URL, powercycletrading.com/special. Just type that in and you can take advantage of the special today. Now here's the S&P 500, the cash. The power cycle model, we're still in a neutral trend. You can see we had a big, huge, powerful move down last week, going into the end of December, and then just on Monday we had this huge move to the upside. But the market, is retraced back up here. We still have some formidable resistance back up here to this descending trend line coming in here, and also right to about where we closed right into resistance about 1430, 1425. And we still have the debate going on over the fiscal cliff. They've had the Senate resolved things. They voted to increase the individual tax rates for those earning families over $450,000 to increase it from 35% to 39.6%, and they're phasing out certain tax deductions on incomes over $250,000, and they've also agreed to a 1-year extension of unemployment insurance. Now that was passed in the Senate, but the House has balked at this. I mean, basically, when you break it down, they're increasing taxes by $50, and they're only decreasing spending by $1. So it's kind of a joke, actually, if you think about it. Increase taxes by 50 and decrease spending by $1. So it's, doesn't add up. But anyway, that's our government at work there. So what can you say? But anyway, that's the current situation. The House has balked at that, so we could see a little bit of pressure to the downside tomorrow coming in. Now, in the daily time frame, the power cycle trading model. Hold on one second. Now, in the daily time frame, the power cycle trading model is actually still short. Even with this huge move up, you can see from the area it went short back on the 24th at about 1426. And had a huge move down into the close of the week, and closed down at 1400, so a 26-point move down. And then on the daily, just Monday, we had that 26 basically recovered the whole move on an outside day. Very powerful bar up. A lot of this attributed to short covering and just a fake out here, thinking something specifically was going to get done. However, even if something eventually will be done, but then they're going to just kick the can down the road, and they're still going to have additional issues about spending cuts. So, it's hard to say if this market can go that much higher, but we'll see. Our market right now, the power cycle model still has it in a downtrend on the medium term and neutral on the long term, but a very powerful move up and back through the moving averages of the right here. You can see back through the 50 and the 100 day to close above that on the daily. Back into this resistance zone of 1425, 1426, then you're going to get up here to this 1434 level again. So some major resistance coming back into the market. So I would think that we'll get some selling back into this thing after the market settles down a little bit. Now the intermediate term time frame that we use for swing trades is it currently went long, and it went into a long uh, entry at 1100 Central on the 31st on Monday, and had this huge move to the upside, closed at 1426. You can see it broke a major trend line right here, so it should retrace back. Let's put in a Fibonacci level to see what kind of price retracement we could be looking at here. Now tomorrow, what you're going to want to see, here's your Fibonacci from the low back on the 31st to the high, coming in here on the 31st where it closed. It made a high of, let's see, 1426.74. So if come in on Wednesday and the market can hold right here around 1419, about the 25% retracement, or even down here to the 382 to 1415, that's a pretty significant pullback. And if it holds in this 382 area, that's still a fairly positive to the market. So it basically just come back into this trend line, which is pretty common. And then if it can hold the 382, we could see it consolidate and move higher from there. Now this is another interesting point to show you. This is a price extension lines for Fibonacci using Fibonacci levels. And you can see here's the high on the 60-minute on the 28th to the low on the 31st. And then here are the extensions. So it went right into the 127.2 right there at 1427 and stopped. So it's amazing, but these Fibonacci levels are great extension levels to use for spotting resistance areas to pinpoint market moves. So it nailed it right into this 27.2 and should pull back here, like I mentioned earlier, see if it can hold into that 382 that I pointed out. Here's a quick look at the NASDAQ 100, the weekly time frame. We're still in a neutral trend here based on our power cycle model. It's been really chopping around. You can see the range has been really kind of in here from 26.95 down to 25.80. So we're back into some key resistance coming in at the 200-day moving average, which I'll show you next. Here's the daily or medium-term time frame. The current model we use, the power cycle model, is currently neutral. It was short on the 24th, had a big move down, but this particular move was so powerful on Monday that it actually shifted to the neutral. So huge move down from basically a short entry at the close 26.48 all the way down to a low of 25.80. But this is a pure system, so based on the pure system, it's neutral right now, and right into the 200-day moving average, which comes in right around 26.09 right here. So that pretty much nailed it as far as the move up, and it also came right into the 618 and failed right there. So that's a pretty big area of resistance. 2 points, the 200-day, 618. I would expect to see this thing, see some kind of pullback here, see if it holds the 50. Powerful move, and then we still have a lot of things unresolved, basically with the physical cliff. Now here's NQ, had a major squeeze right here on the 60-minute time frame, volatility squeeze. You can see how everything consolidated and then broke hard to the upside on the open and just really never looked back. Had this one pause right here and then kept moving higher. So it's still holding long on the intermediate term time frame. Now with this kind of explosive move, it could still pull back, tomorrow Wednesday, back into 26.40, 43 level, and even down to 26.32, and would still look fairly decent on on the 60-minute time frame if it can hold into this level. So I would expect to see it pull back here into that 26.40, 43 level, and then you could get a further pullback. But that's such a huge move up. And we still, again, have a lot going on with the physical cliff. You can see all the price action right in here, opening, a closing price, and open, a close, and open. So right down in here, there's a lot of price action, 26.30. So, could expect it to pull back here at 26.43 and even back down here into this 26.30 level. If it gets back into this area, and you get a buy set up based on our system, this will be a good area maybe for a re-entry back in. What really got the markets moving, especially the NASDAQ 100, was Apple finally woke up. Our trading model actually had a long signal right at the close on the 28th of December, and you can see when it opened on the 31st, it broke a nice trend line here, broke the 8 EMA, and just moved hard to the upside. Next resistance area, the big area of resistance will be right in here at this 555, 554. First area to look at will be right here at around 540. You can see this area right here, 540. So the current system is long, explosive move up. Apple's up over 4%, up over $22. So I'd expect to see a pullback and see if it can consolidate and move higher. You might actually get an open. Well, it depends on what happens overnight with the Congress and stuff, but barring that, with this kind of powerful momentum coming in pre-market, I could see it opening up some, and then that would probably be an area to sell into just for a pullback, initial pullback, and see where it consolidates. Now, one last shot here. This is the intermediate term time frame again. Here's the cycle high you had back on the 18th of December down to the low you had on the 27th of December. You put our price extension lines in here. Potential target, it pulls back into this area right here, the 786. That comes in right about right at 527, 530. So if it pulls back here, it holds. You've got a target up to the 127.2. Extension level is 542, and then the 161 is that 550 area I was talking about earlier. So good luck trading tomorrow, and Happy New Year.